When you look at the typical savings pattern of an Indian household, almost 50% of their savings tend to go in fixed return instruments like a bank FD. A very small allocation used to go in equities, primarily because of the volatility of the asset class. But if you look at long-term returns of equities versus fixed deposits, especially once you consider taxation and transaction costs, fixed deposits have actually destroyed a lot of purchasing power for people because they've not kept pace with the inflation. So if you have had a long-term horizon and instead of equities you've allocated to a fixed deposit, you have lost out on a fairly decent amount of end corpus that you could have built had you allocated into the right asset class. So our advice to investors has been, if you have a long-term time horizon, please consider equities as an important asset class, and just having the right asset class makes a big difference, irrespective of the fund that you invest in. Most fund managers will outperform the benchmark by 20 or 25 percentage points over long periods of time if he's a good fund manager. But the asset class itself will outperform other asset classes. Consider the case of equities, which has outperformed bank FDs and other fixed return instruments by a very large margin. So just having the right asset class for your asset allocation is based on your time horizon will make a big difference to your long-term end corpus.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.